So look, the fact that gold is tier one and revalued, the fact that the countries keep buying it, the central banks keep buying it, repatriating it, gold will have a role in what comes next. Will it be announced on the 22nd? Maybe. But when you see all of these countries, and even those countries whom the US has tried their best to sanction and to bully using the SWIFT system, what is the common thread in what all of these current countries are doing? They're building a highway, a system, if you will, away from the SWIFT system, and even their Project M bridge, as in money, M.
In today's video, Andy Schectman discusses several pressing issues related to the economy, the Federal Reserve, and precious metals. We're adding trillions in debt at an unsustainable pace, and many banks are struggling to cope. The growing coalition of countries like BRICS and the Shanghai Cooperation Organization is challenging the dollar's hegemony. Further, he says that it's crucial to focus on the bigger picture and be prepared for potential changes that may impact the global economy and financial markets. Keep watching Andy Schectman and stay tuned.
But look at what the Bank of Japan just had to do. They said they were going to normalize and stop, stop the way that they were supporting their bond market. And 2 days into it, they had to come back in and reaccommodate and buy bonds again to push interest rates down. The system, through manipulation of interest rates, has been massively distorted. The misallocations of capital and resources, the distortions in asset prices, are something that will be next to impossible to back out of, to deleverage from without collapsing the entire system. This economy has grown addicted to easy money and low interest rates. And you try to go the other direction, and there is going to be reverberations. There is going to be a reaction to that. And this is exactly what I think we will face, just like Japan is facing it now. It's the same exact problem. Same thing we saw in the bond market in the UK. They try to let rates rise. Everything starts to bust with the pensions. They have to come back in and acquiesce to easing again. This is a problem when bankers control the interest rates instead of the market dictating it. And it's not even the controlling of the interest rates. It's the byproduct of it. It's the result of it. It's the distortion in asset prices and the inability to really know what assets are properly valued at in an environment of suppressed interest rates for such a long period of time, where the majority of all the money in the world has been created over the last several years, creating further distortion. So trying to back out of it, trying to raise rates, trying to normalize will just create all sorts of problems as a result of this make-believe land of asset prices that have been massively distorted. Entities that are not going green. When you focus on the BRICS alone, you are only getting one half of the story. The growing coalition certainly makes the BRICS more powerful and makes them more formidable, but it is Saudi Arabia, to me, that is the linchpin of it all. You must speak of Saudi Arabia when you speak of BRICS and of the massive ultimate de-dollarization. And to me, it is the linchpin of the dollar hegemony. And I have often said there will be that moment where Saudi Arabia and OPEC, all of the OPEC countries being on the Belt Road, all of them, will issue a statement, and that will be something like this. Listen, you guys are going green you sign an executive order. By 2050, you plan to be completely green. And look, we've partnered with the Shanghai Cooperation Organization, with the BRICS, with the Belt Road, with the Eurasian Economic Union, with the New Development Bank. We told everyone in Davos that we are going to take other currencies. You've known this for a while, but why would you care? You're going green. The rest of the world is not. All of their pieces will be in place when they make this announcement: protection, agreements, all of these things. And when you realize they're being protected by what amounts to 2 of the 3 largest nuclear arsenals in the world, they become very formidable. GDPs, when put together, that are far greater than ours, becomes very formidable. When that announcement is made in conjunction with all of these countries who have unified, in conjunction with the belief and realization that they will issue a commodity-backed currency, and Saudi Arabia says, hey, we've decided to take the new BRICS settlement currency for oil purchases, or until the new BRICS currency is operational, we're going to take the yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. You add Saudi Arabia to the BRICS and look at all of the countries who Saudi Arabia and organizations whom Saudi Arabia has already applied to, it becomes a whole lot more of an interesting story. And so, yes, I do believe the BRICS and their growing coalition of countries is a very big deal. But when you add these other countries to it and bring Saudi Arabia into the picture, it becomes a massive deal. I just think it's another massive piece in what is a growing list and litany of countries and of reasons to move against the Western hegemony. So, you know, I don't think it has to come out the 22nd. That's what they're going to do. Ultimately, they will. And to me, it's the coalition of these countries. And that was the big thing that I took away from what he said, that is something we can expect on the 22nd. Well, yeah, I mean, look, the Shanghai Cooperation Organization just formally welcomed Iran into the fold. And that's how they're going to escape sanctions. I mean, you know, they're going to sell their oil to the folks in the Shanghai Cooperation Organization for gold, or for a currency that's convertible into gold. It was Alistair MacLeod who came out and said he believes the Shanghai Cooperation Organization intends to issue a gold-backed settlement currency for the entire Eurasian continent. So look, the fact that gold is tier one and revalued, the fact that the countries keep buying it, the central banks keep buying it, repatriating it, gold will have a role in what comes next. Will it be announced on the 22nd? Maybe. But when you see all of these countries, and even those countries whom the US has tried their best to sanction and to bully using the SWIFT system, what is the common thread in what all of these current countries are doing? They're building a highway, a system, if you will, away from the SWIFT system. And even their Project M Bridge, as in money, M, that was designed by China and the United Arab Emirates, and I think Singapore. I'm not positive the third country, but anyways, it's a way for all of these countries who issued their own CBDC first to trade with one another, sidestepping SWIFT. It is a common bridge to go from one CBDC to the next. They're all going to issue their own CBDC, and there's going to be a BRICS currency at some point that they will use for settlement and for trade. But all of these things are pulling pieces of the Jenga tower out from the US hegemony. And that's what you need to take away from this, that this trend is growing and gaining credibility, and it is gaining mass and acceptance. And it's something to not be taken lightly as far as I'm concerned. But most of the people out there still have not been jarred into realizing what precious metals represent, even though you got a whale trader holding 50 million ounces long in silver contracts, where the central banks are buying more gold than at any time in history. And all of this chaos is around us. People still think that the road to retirement is paved only with dollars and mutual funds and stock certificates. And, you know, I don't know when they'll wake up or what will happen when they do. But if you do see an event, those premiums will go right back to where they were. This is as good of a buying opportunity as I've seen literally in almost 4 years. And I mean that 100% to my soul.
Andy Schectman highlights the concern over the current economic situation, particularly related to the rising interest rates, national debt, and potential inflation. The discussion delves into the complexities of the Federal Reserve's decisions, the implications of a growing coalition of countries moving away from the dollar, and the impact on the precious metals market. Is there anything you have learned from this video? If you have any comments, please let us know and keep supporting us by sharing and subscribing. Thank you.